Finance Minister Tito Mboweni has tabled his first major policy statement since returning to cabinet. A statement he says is built on a strong conviction that the country can be renewed, but with weak economy, tax revenue shortfalls and the depreciation of the rand, which is forecast to put pressure on the nation's finances. Just how much hope does this budget offer for a renewed economy? Earlier today, I spoke to a panel of experts: Busisiwe Khadebe, economist at Nedbank; Bonang Mohale, CEO of Business Leadership South Africa; and Jameel Ahmad, Global Head of Currency Strategy and Market Research at FXTM. Busisiwe kicked off the conversation with her overall rating of the tabled budget. Here's that conversation.
He had to balance a lot of things there. I think he came out positively trying to, when he started, I thought, oh my word, he's making a whole list of things. That is it a wish list, or he's actually going to get down to the nitty gritty? And for some of it, he got down for the nitty gritty. I think people are going to be very disappointed when we look at sort of the fiscal situation that has deteriorated significantly since the time of the budget. People saw sort of Moody's coming out and postponing their credit rating sort of announcement for later. They saw that as a positive thing. But I don't know how positive they're going to take sort of the fiscal figures that came out currently.
Absolutely. Yeah. As I say, we'll be delving into the detail in just a bit. Before we do, Benang, a lot of attention, many had said, was going to be paid to the finance minister's delivery, his tone of that delivery, and the kind of confidence he'd be able to extort, I guess, from business and consumers alike, investors as well. Where are your confidence levels sitting on the back of that?
Very high indeed, and I know I speak on behalf of all the 86 CEOs of major companies when I say we've got full confidence in the trusted hands of Tito Mboweni. He's experienced, and even though it's his maiden one, remember that he's been in government for a long time, in the NEC for a long time. But for me, I particularly like the fact that the tone is positive, it's building, it's creating. It hits all the right notes, it stops the bleeding, it reduces the debt, it fixes the state-owned enterprises, it increases governance and parliamentary oversight, and it focuses on things that are sustainable, like education.
Is it enough, Jameel? Just looking at what was presented today and market reaction to it. I mean, we had rand movement come through, quite a bit of weakness, had the local unit at about 14.45. Of course, we've got external factors to consider in tandem here, but were you pleased with what the minister put on the table?
I think it was honest, and the biggest takeaway there is that they've revised growth down lower. It's not that much of a surprise. We've seen major institutions like the IMF revise down global growth for the next 2 years, 2008 and 2019. However, it's quite concerning how much significantly growth has been revised down lower. And there's also concepts there about international financial market movements, stronger dollar, how this is weighing on emerging markets. And of course, you've got other external uncertainties as well, a lot of geopolitical risk, those ongoing US and China trade tensions, which are not good for emerging markets. So this could also change. If there's any change to the market sentiment, this could also change the real projections that we have here.
Absolutely. A halving of that growth expectation coming through from 1.5% when the budget was delivered in February to 0.7% now. Like Jameel's highlighted, it has been presented in this context of what's going on in the global environment. But the trick, Busi, was for the minister to show that he's found the money to grow the economy while simultaneously having a handle on that budget deficit. 3.6% of GDP was budgeted for. We've seen that now escalate to 4% of GDP. It's almost a managing of expectations, then, one would assume, that was done yesterday already.
I mean, it is a managing of expectations. There's nothing you can really do about growth. The reason why we saw that deterioration in the deficit was because of growth. If you look at revenues and where they expected revenue growth sort of at the time of the February budget, I think they expected this year revenues to grow about 10.1%. It's sort of 7.6% now, so the reality has hit the show, and that a lot of that has to do with what happened with growth. So you had to sort of say, we're going to take the budget and we're going to try to find this 50 billion rand somehow to reprioritize it, to make sure that in the future we get that growth. But if you look at stuff like expenditure, for instance, we know if you spend more, you can sort of expand and grow this economy. But he decided we're sticking to that expenditure ceiling, even though we've got an increase in expenditure by taking some of the contingency reserve money and putting it in there. But he's created a nice balancing act by saying to us yesterday, but people knew this. We knew the growth thing. So the Nedbank forecast is similar to the Minister of Finance because we knew that. It's a mathematical sort of thing that you have to do right now, but he knew that that was going to happen. But it's a serious when we come to the fiscal situation. It's just a growth thing, and there is nothing he could do at the moment, but for the future, he's sort of trying to sort that out.
Jameel, that being said then, I mean, should we be changing the thinking around deficits perhaps, and let it sit at that 4% level with a different psychological interpretation of what it actually means? Because, that deficit is one thing to consider. Overall debt as a percentage of GDP is expected to continue to rise as well, sitting at 59% rather at the end of 2022.
It's a good point to make, actually, because there's so many different external risks that can really present risks to the South African economic growth outlook, like we've just seen today. So maybe now isn't the right time to be focusing just on the deficit and instead looking at how policymakers are really going to drive the economy, because consumer sentiment is absolutely key now. The trade tensions is just one example, is the biggest risk to the financial markets since the global financial crisis. And that's a big risk to investor sentiment as well, towards risk appetite. You've got a lot of risk aversion, which means investors are not going to look for emerging markets right now. So perhaps the thing to do is really to raise consumer sentiment and hope that consumers in South Africa can drive the economy, because there's a lot of external uncertainties and these are not going away either.
Yeah. With that being the playing field then, Banang, I mean, I guess, if we're going to digest the fact that, rising deficits are something we're going to have to contend with in the current climate, it would be easier to do if we knew exactly where the funds were being directed in the first place, that they were being directed down the right avenues that would stimulate growth down the line. Are you convinced?
Absolutely, because remember, there's a golden thread that runs through the conversation we've had with the president around youth employment service. This continued in the job summit. We are now starting tomorrow the investment summit, and the conversation is the fiscal envelope is fixed. We're redirecting the 400 billion. South Africa's problems are known. I think what is needed is courage to do what needs to be done. Our problem has always been about doing the execution. But I love the fact that the Minister of Finance has been quite explicit in putting to bed the less useful conversation we've had. He said we are not reviewing the mandate of the central bank. He was very clear about the fact that the debt to GDP ratio is important because we chose to borrow and to be overly dependent on foreign direct investment. Therefore, the rating agencies become quite useful. For instance, they are very low-hanging fruits. Why do we need 3 boards for SAA, for Mengu, and for South African Express Airways? Why do we need 4 tourism agencies and 4 boards when we could really be looking at fiscal consolidation and prudence? All of us need to be tightening our belts. He needs to reduce the bloated civil service. He needs to reduce the size of state-owned enterprises. A third too many. Those are the practical things that need to be done.
Especially where you've seen private sector go down that route already. I mean, we're looking at a 27 billion rand shortfall in tax revenue, and he's, dismissed the perception that we have been collecting revenue faster than anticipated. And I guess this in an environment where companies are under pressure, and it's cost cutting to a large extent that has become responsible for the growth that we have seen, even if few and far between on bottom lines.
In fact, we knew that we're in trouble when the last 10 years, our GDP growth has been lagging the population growth. Therefore, we've been going backwards. The last 48 months, we said in the NDP 2030, we ought to be growing at 5.4% GDP growth to absorb the 180,000 young graduates that get onto the job market. We've been barely touching 2 percentage points. In fact, the last year, 0.7%. Therefore, we need to do something really drastic. Instead of 1,001 fine-tuning, twigging, we need 4 big things that will move the dial.
Welcome back as we unpack Minister Mbowene's medium-term budget policy statement. And we had, joining me in studio earlier today, Busisiwe Khadebe, economist at Nedbank, Bonang Mohale, CEO of Business Leadership South Africa, and Jameel Ahmad, Global Head of Currency Strategy and Market Research at FXTM, really interrogate what came to the fore. Jameel kicked off this part of the conversation, commenting on government's handle on the expenditure ceiling following Minister Mbowene's emphasis that government will not be providing extra money to fund above-inflation public sector wage increases.
Obviously, the deficit here is a very sensitive issue and government spending, but the government does need to be spending at this time because, again, I would point out the global risks. They are so key, and there's so many different ones as well. And the growth outlook can really deteriorate further from here if these global risks do continue. So government spending and the spending has to continue, and it has to really raise the sentiment of the consumers, the small, medium enterprises, and we really need something that's going to drive the economy because we don't know what's going to happen in a very unpredictable and uncertain external environment.
Absolutely. Busi, still, we've got 8 Rand out of 10 Rand spent by government going to salaries of civil servants. And we've had the minister warn that it could have serious repercussions for the provision of basic services moving forward. This is not a problem that's going to go away overnight, surely.
It's absolutely not a problem that's going to go sort of overnight. But I find it very interesting when sort of the public sector sort of agreement came to when they told us what the agreement was, it was usually inflation plus 1 or 2. And people think that, oh no, that's fine. But when you look at actually the figures afterwards, like this 30.2 billion Rand we're going to have extra over the next 3 years, I mean, that tells us we're just not thinking of the salary, but the other benefits are actually coming to play in that amount. And that's why we are seeing that mess. But if you look at expenditure in general, I mean, for the last couple of budgets, we have really just kept cutting the expenditure ceiling. So that's not actually the issue. Yes, sort of public sector wage bill is an issue, it's something we have to look at, but there's something else bigger than this. It's not expenditure that is the big problem. Yes, I think government should spend more because that's how you stimulate an economy, but we don't have the fiscal space to do that. So we've taken some of the contingency reserve up, but there's something bigger. It's not only, I think, the expenditure that we need to look at. I mean, if we look at those state-owned enterprises and the allocations we've given to them, something like SAA with a 5 billion, SA Express with 1.2 billion, and the South African Post Office is 2.5 billion, and then I look at the zero-rated goods, and that's going to cost us what, 1.2 billion, and that's the SA Express amount there. There are certain things we can still shift around and reprioritize. We can't spend less. We've been cutting that. That's not how you stimulate an economy. We can sort of maintain that ceiling, but there are things we could do probably slightly better. Maybe we need to spend sort of more efficiently and be more effective in that spending.
So on that note then, and we'll get to SOEs in a bit because that was very interesting, but Bonang, we had Minister Tito Mboweni make a comment saying that they say don't talk about this wage bill because Kasatu is going to get angry. How does the unpalatable hot potato then get digested? Because noted here is that there will be no mass retrenchment. So how do we start to curb public sector pay? What strategy needs to be?
So when countries typically are in a fiscal crisis, they stop being wedded to ideologies. They act only in the best interest of their countries. Politicians stop paying allegiance to their political parties. Therefore, this is not the time to pander to the whims of labor. It's about saying, how do we collectively, as a people with great natural endowments, get ourselves out of this mess? The rating agencies are not worried about ideology. They are saying, how do we look at the growth prospects, at the fiscal strength, institutional strength, and susceptibility to event risks of South Africa as a country? And that's what we should be worried about. All of us need to be putting our shoulders to the wheel. These are difficult times. We are in a spot of bother, so we don't have the luxury. But I liked what the minister said. He said, the more that this ANC-led government protects the rotten amongst us, the more they lose trust. Why does trust matter? Because it's the glue that holds government to the electorate. Okay. Therefore, if we focus on trust, we have a positive narrative. Part of the work has already started.
So while that's the rhetoric that comes through, what have you made of the kind of support that continues to be endowed on our SOEs and SAA in point?
Let's see how it goes, really, because we really need to see how the reaction is to this budget and whether it really does change things in the bigger picture, because it's a medium-term budget. And let's see really how things develop. There's so many uncertainties, and we really need to see how the economy is going to convincingly move away from a technical recession, because that sharp downgrade, 1.5 to 0.7%, that suggests to me that when South Africa can exit recession, will it consistently maintain above those levels? Because there's a risk here. The growth is very subdued. The outlook's very subdued and is quite unconvincing, and we don't know whether South Africa could continue to perform under par when it comes to economic growth.
Let's see how things develop, and I guess that is key, because already today an interesting development coming through in that speech where he emphasized the fact that there are no holy cows. What does that spell for you? How do you interpret something like that, Busi, when it comes to privatization, or at least part privatization of SOEs and the kind of private sector, public sector partnerships we could be seeing down the line?
I mean, he was very clear there. The three positive things there was, one, he came out there and said we urgently need to deliver some critical sort of projects out there. That was one thing he said. Second one was we had this realization that the private sector actually has to come to the party, and I think at some point he said there are certain things that the private sector can actually do better, and we mustn't actually forget there. So they must come to the party. The private and public sector must work together, and obviously he protected the independence of the SARB. So I think it came out very clearly. There are no holy cows. There are certain things the private sector can do better, and I think I liked that quite a lot when he said that.
That, of course, the one positive. Have you seen enough detail when it comes to exactly how this 50 billion rand stimulus package is going to be funded? We've looked at the detail now on where capital is going to be allocated, but how much of that is coming from where exactly, not specifically laid out.
I mean, you don't expect that from the medium-term budget. Even when you said the zero-rated goods, I didn't even expect that, because I'm expecting that from the budget. So you don't really expect him to, unless you sort of really go look at those numbers. But there was some sort of repriority. If I look at the expenditure side of things, he has sort of pushed some things around and said, you know what, I'm going to increase, I think it's something like 17.4 billion rand. That expenditure, it has been increased, but I've done it sort of in another type of way. So he's used some of that contingency reserve, but we don't sort of know the detail of where exactly, I have to look at the review, that money comes from, but we know what he's going to spend it on.
Is it enough, Bonang, to start to inspire some confidence as far as investor spend is concerned? Because that's what we're looking forward to tomorrow at the Investor Summit, where we want to see, finances under control so that $8 billion worth of investment can start trickling through.
You see, for us as business, there are many low-hanging fruits to stop the bleeding. For instance, Minister Alec Ewin received a plan to merge the back office of the 3 government-owned entities, and maybe with a single board, but that has not been done. So when you benchmark SAA against similar airlines with the number of aircrafts and the routes they fly to, we are a third too much. So there needs to be some culling, whether labor likes it or not, so that we can really renew ourselves for growth. Lastly, if you look at municipalities, because that's where the tire hits the road, the Minister of Cooperative Governance and Traditional Affairs, Zweli Mkhize, says we have a 65 billion rand budget over 5 years, but 8.6 billion of that goes back to National Treasury every year as unspent because of lack of capacity. But 3.2 billion is recurring unspent, so we just lose it. So if we just delivered on project management, project management is delivering mega projects on time, on budget and in full. This is not rocket science.
Absolutely. What investors want to see, but also, Jameel, what the ratings agencies want to see at the end of the day. Do you see today's delivery being enough to stave off the ratings agencies, given that growth cut, given the deficit rise that we're anticipating as well?
Probably, yes, for now, because there wasn't that much further bad news if you look past the growth headline that was really put into this budget statement. One thing I do want to highlight on, though, and it's a really good point, the message about the key of the independence of the central bank, because that's something the ratings agencies do want to see. Because if you look at all that currency volatility in Turkey and the Turkish lira, a lot of that was because of the President Erdogan and his comments about exerting more influence into central bank policy. And we've seen a lot of global market volatility over the past 2 weeks, which has come on the back of President Trump and his comments on US central bank policy, which is something that's making investors very nervous. So this would be something that I would say the ratings agency would look at as well, and it's a good thing to highlight in the statement.